Good afternoon, everybody, and welcome to Live Market Analysis ASX edition. My name is Carl Capolingua. I'm the market analyst over here at Think Markets Australia, and it's a pleasure to be with you as we delve into the depths of your portfolio, try and find the winners, we'll hang on to those, turf out the losers, and maybe find a couple of new gems to add to the mix. Let's get that first click wrong on the camera. The agenda for today is very simple. Over to you. It's Ask Me Anything about ASX stocks or ETFs. Head to your chat window on Zoom, or if you're watching me on any of the streaming services, that is YouTube, LinkedIn, Facebook, and Twitter. Jump on the chat window there and send me your requests. I'll give you my best technical and fundamental analysis reader where possible. Let's head over to the Amy Broker charts here. And I've got a few rolling in already. Xero from Doug. Let's check that out. And I'm going to head over here and go XRO, which is not that one, XRF. Hey, maybe we'll do that one in a while. I know it's very popular among you all. Happy holder there on XRF. Nothing so sinister in the chart, which would suggest we need to get out. Although there's a few too many black candles in there for my liking. So just to keep an eye on it. Otherwise, we've got Xero. Look at all those arrows. Let me delete all studies and we'll start afresh. I'm pretty sure what I've said in the past on this one is we like it. We like it as a turnaround play, and we can see here why we like it. The short-term trend, well, that's very well established to the upside, isn't it? And the long-term trend is starting to turn higher. It hasn't officially switched to a long-term trend. We're very much in this sort of amber or neutral phase, but it is heading in the right direction. And the key theme for me here when it comes to understanding when the long-term trend has changed, because I'm using exponential moving averages, hey, they're a little bit faster than your standard moving averages, but moving averages are slow by their nature, especially using the longer term ones. If not sure which ones I use, they're over here on screen. Okay, I've got nothing to hide from you at all. But my 144, 233 EMAs will turn quite slowly. So price action can tell me in advance whether a long-term trend is changing. And the key for me is the dynamic support and resistance. So what we'll find, and this is why I drew all the arrows, on the way down, when the price is beneath the long-term trend zone, we're seeing dynamic resistance, okay, or dynamic supply in the market. That we find that zone, when we get there, we find supply in that zone. We're seeing it here as well, okay. But the key is that dynamic resistance or supply turns into dynamic support, and that's what we're seeing at the moment. So all very good there. Happy with the long-term trend and the short-term trend. Next, I will go to the price action. So just showing you my methodology, and it's the same methodology every time. It's important we have a methodology and that we are consistent with it. Now I'm going to look for the peaks and troughs, and because these two are inside candles, I won't draw one there. And then I just need to find the highest point of these three. I think it's there. And see, that's inside. So you can actually skip all of those until you get to there, and then it goes outside. So we'll go there. Pretty tricky price action on this one to get right. But that's the way I would do it, and you might have a slightly different variation. But I think we can see that we've had this extended push high here with some really great candles in it. Okay, a little bit of a pullback, and then we have pushed above the POS in here. It's not the cleanest of price action, let me tell you that. It's not perfect, and I'll show you what is perfect in a second. So there's our POS. There's our last pod. We draw that in down here, I think we can. And really what we'd like to see from here is a bit of this sort of action, okay? So we're in a little bit of a pullback, and then we start to see, don't really want to see it go down much further than where it is right now, and then we push up so that our pods, our points of demand, are starting to rise, indicating to us that we have building demand in the system. So the only way really you can have your points of demand rising is you've got building demand in the system. And our points of supply, we already know we're seeing supply quite fluid here. We can see that on screen in that this POS is higher than that POS, even though we've had a little bit of a zigzag pattern lower here. But I think we're seeing some movement on the supply side, as in supply starting to sort of, I wouldn't say give up, it's not the right word, but they're starting to have second thoughts about supply, let's say that, and demand, hopefully, if we can get another push up here, is reinforcing itself. And then really, if we get what I've drawn on screen, it's going to start to look quite strong, actually. Look at that. My brain is saying, yeah, that price action, that picture, all together looks very, very good. We don't have it yet. That's the thing. So let's wait and see. Now, what would make it even better is if in the green zone, which is about to appear on, not what I want it to do, in the green zone, which is about to appear on your screen, somewhere around here, I think, we get the right candles, and we all know what the right candles are because you've seen me draw them about 1,000 million times, but we've always got new people coming on board. So let me just draw them one more time for you. And this is our demand side candle here. And put that on there. And just a bit of noise in the background. Apologies if you can hear it. It's just some trades doing some work just outside my door. And we've got the two candles, the two, as we call them, demand side buddies. Candle one is your transition candle, going from starting out sort of with excess supply and then changing into excess demand. And this one is just all excess demand. Okay. These are our demand buddies. You tend to see them together often, but if we're going along, we like to see those in advance. Okay. I don't think I can be any more comprehensive on that one for you, Doug. I want to see what happens here, and I want to see some good candles, lower shadows, and a higher pod being logged, preferably with that pod coming in at or above the second from last POS. And I know Doug knows exactly what I'm talking about here because he's been listening to me more than long enough to know that good price action is the price action where those last pods, those last troughs, are coming in at or above the second from last peaks, POSes. Okay, so there's your POS, there's your POS, there's your pod. So last pod at or above second from last peak, and this is what I would call magic price action. Smiley face emoji. Let us head over to, because live market analysis is not just about looking at charts. We want to look at some of the fundamental valuations for these companies as well. And to do that, I have the Thomson Reuters Refinitiv Icon spreadsheet. It's a spreadsheet originally supplied to me by Thomson Reuters. I found it in the Refinitiv Icon platform, downloaded it, and thought, that's pretty neat, isn't it? And then I completely, well, I wouldn't say completely changed it, but let's say 80% changed it. And what's great about it, though, is that Thomson Reuters goes out and surveys the biggest brokers, the biggest fund managers in the land and beyond, and asks them, hey, smarty pants, what do you reckon the revenue for Xero is going to be this financial year and then into the future? And then they get all the other metrics, collate them together and get us the averages, and they really constitute our consensus numbers, consensus estimates going forward. But they also give me the historical data, what's already in the bag. And we can see we've got 16 brokers covering Xero. And I like to look at the high and low price target, because if you can get a range that's really, close to or above the current price, and that's pretty neat too. It's not so much that way, but we do have an average price allowing about 6% upside from here. We've got 2 strong buys, 9 buys, 3 holds, and 1 sell, which I would suggest then is making Xero a little bit polarizing. That means all the brokers are completely agreeing on the rating. What I like to see next is to look at the EPS line and make sure that we have this bottom left, top right sort of skewed to the earnings, and preferably even that's, through the pandemic, they've held up very well. Look, this is a bit lumpy, and it probably explains why Xero's had a bit of a tough time of the last 12 to 18 months. Okay. Remember, share prices just reflect this line here. Share prices are a direct reflection of the EPS line over time. If you were to chart EPS, you were to chart share prices, they would be very, very close together. Looking forward, though, that's the past. Looking forward, we can see 18.6 cents per share earnings, which is obviously a big jump, isn't it? Well, 97% jump there. And then it's going to go crazy big after that, 367%. You can see here on the percentage change. Then it'll moderate a little bit, but still, if we look out over the look forward period, which is out to FY26, we can see that we're getting 119% compound annual growth rate, which is astronomical. I mean, the average for the Australian market is somewhere around about 8%. Give or take, and the average PE on the Australian market is about 15. Now, we're never going to get something that's growing that quickly at a PE of 15. The PE will always be much higher in the market. That is, investors understand that earnings are growing quickly, which means it's bringing the PE down. They'll pay a higher PE today on the expectation that that PE will come down significantly in the future. And you can see some of the PEs that brokers have paid for Xero in the past, when it was just starting out with the promise of earnings. not yet delivered. The PE was 3,200 times earnings, 500 times earnings in FY21, 960 times earnings last year, and then we've got nearly 500 times earnings for this financial year, which is just complete, it looks like. You can see it does come down quickly, but does it come down quickly enough? That's what we have to determine in our target PE. That seems a bit high to me, honestly. I'm not sure if I feel comfortable paying such a high PE, because I think there's a lot of execution risk in that. And that means you could change this if you wanted to. I'm just going to leave that for the time being, and I tend to feel more comfortable just changing my target PE. With this one, because there's so little actual EPS history, there's no point using the historical value, which would be putting a little H in there, and that's looking at the historical PEs and finding the median. I can use all of the PEs, or I can use the future PEs, which is the one I tend to use by default. Or I can put in a target PE of my own, and I'm typically going to say that, look, 40 times for growth stock is where you're starting to cap out, unless it's the most extraordinary growth stock. And I must admit, 40 times is probably very conservative for that 120% growth. I'm not going to fidget and fart around with this to try and find the right number, but I'm just giving you some numbers as to help you understand what you're comfortable with. Where do you top out with your PE? What's the most you'll pay for X amount of earnings? And it should really be a little bit flexible, because 119 is fantastic, and it's better than, say, 50, which is amazing in itself, because we know the average is about 8. So I'm just going to give you some numbers here, and then I'm not going to say anything else. It's for you to say, okay, well, I'm at 50, I'm at 60, or whatever it is. I'm guessing the market is feeling comfortable around that sort of 50 level, because that's pretty much getting close to the broker rating. And then if I went 60, for example, it starts to look a bit better, and then 70, and we saw what 80 was. It was much better than that. I don't think there's any red flags in this valuation spreadsheet for Xero to suggest that I shouldn't be buying it on the basis of the chart. So, and that's really all I'm looking at with my fundamental analysis. This is my fundamental analysis. I very rarely will go in and look within the company and what it's doing, because I don't care. And I know a few people just coughed up their milk arrowroot biscuit as they were dipping it into a cup of tea there. But it might shock you, but I really couldn't care less what the company's doing on a day-to-day basis. And the reason for that is these 16 brokers, they do care, and they're constantly analysing everything Xero does, the minutiae, the day-by-day. Everything you need to know about Xero is in the numbers on screen. That's all I need to know. So as long as I've got these numbers, I don't need to look at the company, and I'm happy to say there's nothing in there really which would tell me not to buy Xero at this stage. Okay, Doug's got IFM, which I will do. It hasn't done anything, Doug, since last time we've looked at it. I still think it looks fine. I'm happy to add some risk here and see how we go. It's been a bit disappointing over the last few days, but I do think the push through here and the shallowness of the pullback since then holds it in good stead to push up. And if it doesn't, we've got a pretty clear area where we can back out of this to tell us that this hunch that we had, this assumption hasn't worked. I've done the IFM, well, let's put IFM in here. I'll have a look at it in here for you. But I did put an article on the Think Markets website about IFM, and it will have all of this data in it. In fact, I took a snapshot. I took this exact picture and put it in that article. And if you're not sure where that article is, let me just quickly head over to here, which is the Think Markets website. I'm hoping that appears for you in just a second. I've no doubt it will. There we go. That's the Think Markets web trader demo account, which I'm going to load up. This is where you do all your trading with us, and you've got everything you need to trade in here. For example, if I go XRO, I get Xero. There it is there. Okay. And let me head back to here and go market analysis, market news. And this is where all my articles on the Think Markets website live. I just wrote one last night on yesterday on OPEC. And there it is there, an Aussie tech stock made of all the right parts, of course, fitting title there for Infomedia and a little bit about it. And there's the exact screenshot. There you go. And it'll be a couple of days old, so keep that in mind, that the financial numbers will change. They always change. Okay, that's if you don't know where to find it. Heading back here, let's very quickly do this one, making sure I've got the right FY on it. And we have 7 brokers covering the highest price target there, 185 versus 137 low and a 162 average. That's about 10% upside. Average rating is a buy, 1 strong buy, 4 buys, 1 hold. There is a sell out there. EPS line is pretty steady until we get to COVID. And for this one, I gave it a free pass because imagine, or remember, I should say, the supply chain chaos in the automotive industry in 2021 and for most of 2022. So we can forgive it a bit of a misstep there, but coming back pretty well, really, I think, through FY22 and FY23, and then the growth that comes in from there. We've got 28% compound annual growth rate, which is very good. I won't use that, I'll use that. And without sort of doing too much to the broker numbers there, you know, 220. If you wanted to say there's some risk in the world, you know, it probably comes down to 202. I can't remember what I said. Go read the article, but I would have just been literally working off multiples there and not trying to play around too much with the spreadsheet. But the spreadsheet is literally on the website for you to go and have a look at. Let us have a look again at some of the other ones here. JB HiFi from Craig. Which look, you can see in the past, we have been quite bearish towards this one, haven't we? All sorts of S is greater than D sort of stuff in here, and lower points of supply, and minus 1/3 all over the place. Is it time to get bullish again on JB HiFi? I don't think so, at least not yet. I would need to see some price action first, which resembles this, and we've got a good start. So up to this point here is great, but we're hitting a little bit of a supply zone here. Let's see how we respond there, and maybe if we can do the little zigzag and start to head up. We won't have to wait till it gets to 46 to add it, okay? But we would certainly look very carefully at the candles in that zone there, and the reason for that zone is because here's our POS, okay? The POS is the previous point of supply. Just change that to red so you can see it better. So there's our previous point of supply, and the previous points of supply, we should expect them to act as points of supply into the future. And that high there is 44.37. And if you wonder how I make my charts for AusBiz and all of those other things, I literally have to go to every point of demand and label them, and every point of supply and label them and make them look like that. Put the actual price in. So, you know, every line on my charts is absolutely accurate. That's good news. So let's see how we go here. And if we see the demand side buddies in there, not the supply buddies you can see in the past, because I was saying, watch out for the supply side buddies. And I wonder if I drew that before or after that occurred, because it looks like that's exactly the exact supply side buddy there. Yeah, you're going to need to see the demand side buddies and a move back into higher peaks and higher troughs. And if and only if that happens with candles that are good enough, and we'll have to see them when we get there. We won't know until we do. Then I would happily add some risk. A very speculative trade, turnaround trade, but I do think I probably could get my 1-to-1 in before I have to tackle this up here. So is it there or is it there? Look, it's really both. It's both of those are important, okay? I don't think I need to do a whole lot more on that, to be honest, Craig, and I won't do the valuation really, because we're not going to buy it yet. If we get to the point where we're seriously thinking about 1/3, then let's do the valuation. Until then, let's just keep moving. From Carlo, hello Carlo. Hello Carlo, thanks for your time. You're welcome. From David Vulcan, good. Let's do a lithium company, and we might head off a few of the requests in the window there and do some of the lithium stocks. Adonis is asking for Allkem, for example. I've got requests on Twitter here for GLN. So let's just work our way down the list, shall we, and do as many of them as possible, as quickly as possible. Just trying to find my lithium list. There we go. We'll do Vulcan first. We'll do them in reverse alphabetical order. How about that? Okay, what are the trends? Where do I start? Short-term trend is clearly down. Very frustrating that sometimes they draw those dash ones. There we go. And long-term trend is down, so no need to do much more work on it yet. What I will say is that if it can start to do stuff like this, okay, then I'm going to be interested in it. Even so, if it did stuff like that, you can see there's going to be huge supply in the market in and around that zone. There is some demand though, certainly coming in from that old point of demand. You can see it impacting the market around that $5, people looking for a bargain. Now, I would say the most likely outcome here is actually we fail at the short-term trend, and I reckon we'll actually probably come down and probably test that again, and then we'll see how we go from there. So look, for argument's sake, the green arrows are probably what I would expect to happen. The red arrows is what I would require to happen. And then even if we got the red arrows, I'm still probably not going to be interested because there's so much work that needs to be done at these points of supply. And don't forget, points of supply are where people, long-suffering investors, got into this stock, and they are regretting that every day of the week, as in that day they regretted it, that day they regretted it, that day, they're still regretting it. And this area here and here represents break even for them. So some of them will want to supply in this area, okay? Not all of them, but many of them will. And it will just create resistance, there's that word, to the upside. And therefore puts Vulcan in the too hard basket. Because I can't see a reason to buy it right now, I can't see a reason to go to the fundamentals. I just don't think we need to at this stage. Let's save that look at the broker consensus and the valuation for companies that might actually have a chance of going up anytime soon. Talking about companies that don't look like they've got much of a chance to go up anytime soon, and I don't mean that in any nasty way, it's just what I can see on the screen, is Sayona Mining, the next one alphabetically reversed. And you can see the green lines here, which I've drawn in the past last time we looked at it. And I would have said we need to see price action that looks like that. We haven't really seen it so far. So once again, I reiterate, there's not a lot of reason here from the market for us to get involved in this one. And I don't hate Sayona, contrary to popular belief. I wish it all the best. And I would love nothing more than for it to put in the right candles, the demand side buddies, and the right price action, high peaks and higher troughs, and give me a reason to tell everybody in the world and beyond to buy it. But I'm not seeing it yet, and I can't tell you to buy it. This is just the way my methodology works until I see the balance of supply and demand of the market shifting towards suppliers. All the shareholders out there, you think there's so many zealots about Sayona, they think this is the best stock in the world, and yet somehow there's still plenty of people out there each and every day in the market wishing to sell. And yet, as good as it is, the demand, the cash from mum and dad and fund managers alike, the cash isn't moving into it. It's not causing excess demand to push the price up. Not saying it can't happen tomorrow or the next day. It's just not happening right now. And that is why probably I drew this candle here, because I generally cover my backside by saying, hey, look, tomorrow you could see that. For all I know, it could get taken over by Albemarle, okay? But I don't deal in what's possible, okay? I deal in what's probable. And this is possible. Yep, certainly possible. Possible, certainly possible. But is it probable? Is it probable? Probable with 3. Or is it more probable that it heads down here? I don't know. That's your call. Don't need to do any more analysis on Sayona at this stage, but I'm happy to look at it every week if that's what you require. Let's have a look at Pilbara. Very similar here. Obviously, it's got that bit of a Liontown boost. What does the Liontown boost look like? It looks like that candle. A little bit of a follow through, not too bad. But we're seeing the impact of this long-term trend zone reassert itself. This idea that it is a balance point. It is a balance point. Now, a long-term balance point between good and evil, right? Between excess demand up here, this is excess demand lives up here, and excess supply lives down here. And who's winning the battle? I think excess supply still has its nose ahead. It's not certain, but I think if you're buying this now, you are taking a big bet that that something good is going to happen. And I just can't see it in the chart. If it was to do what I've drawn, you can see clearly here, the light green arrows, or light green lines, rising price action. If we get, for example, another pod down here, a nice pod with a nice demand side candle, right, to come in above that pod and then this little POS, which we've created here, we take that out, then I'm going to start to get very excited. But not until then. I don't think there's any more we need to do on this, and we can see that trend line there. Not that I'm a big trend line user, coming into play pretty much also around my dynamic resistance zone. So not out of the woods yet for Pilbara. We'll see how we go on that one. Let's keep going here. PLL, I'm going to pick up the pace and only really comment on the ones that are looking good or that have the ability to look good soon. I think this one has the ability to look good soon, and certainly if it can start to do the right thing, that is throw in our demand side candles in the green zone somewhere around here, I'm going to get interested in it, but not until then. But that is one of the better ones, let's say, because it's trying to get itself back above the long-term trend zones. But let's say those trend zones are still a bit flat. Let's go to mineral resources now. We've had a lot of minus 1/3, haven't we, on this? And there's your Liontown bump in here. That's that Liontown bump, which I think saved many of these lithium-based companies from oblivion. The other problem for this is iron ore is coming off as well. So let's head over very quickly, and while we're on the topic, have a look at some of these actual minerals prices. So there's your iron ore price here. Iron ore Shanghai 62%, and you can see my scratchings before that we needed, obviously the price action we needed. Let me get rid of some of these. Did we see it? No, we didn't see it. In fact, we're probably, if anything, forming a lower peak. Okay, so we've got, let's get rid of that. Let's drag that over there, and let's say that we have got this lower POS in the system now on iron ore. This is Shanghai iron ore, and if I draw that in there, we get a nice little picture of POS, and we're heading down to the pod, which also happens to be at that long-term trend zone. And I would say if we close beneath that pod low, and I'll give you the number right now, so you can keep an eye on it yourself. That low is 844, close beneath that. This trend in iron ore is very much over, okay? So that is not going to help a company like Min. Let's have a quick look at lithium carbonate as well while we're here. Zoom normal. We can zoom out a little bit more and go line chart. And you can see that there's no respite to the plunge in lithium carbonate prices. I know there's talk of some of the key Chinese battery manufacturers trying to put a floor or agreeing to a floor price. It's about here or just above. I think it was $36,000 a ton, which works in yuan per ton, works out to be 250 odd. But it hasn't stopped the fall. We had 3 days of that being in the market, and it hasn't stopped the fall here. And we're seeing the fall here in lithium hydroxide actually begin to accelerate. And I still think even if there's a floor put in for lithium carbonate, there's some catch up to do here. And what does catch up mean? Catch up could mean half from here very easily, isn't it? We could see 60, we could see 30, 35, 40 even back to that previous level. So looks a bit scary, and maybe also explaining for you why some of these lithium companies really haven't bounced, even though that Liontown use is in the system. And that's because fund managers aren't silly. They don't get excited by these very short-term blips. They understand that Liontown announcement might be a one-off. But what they do get excited about is when that liquidity comes in from the mum and dad investors thinking, well, this has changed everything. And what we're looking for here are signs that the fund managers are using that liquidity, that speculative liquidity, that lithium's back on liquidity from all the chat rooms to sell into. And the candles will tell you that. The candles will say, oh, no. The big money is buying as well as the speculative money. That'll be white candles. That'll be lower shadows. But if we start to see upper shadows, we start to see lower peaks and lower troughs, it's telling you that the big money is actually using the liquidity coming in, the cash coming in to offload the shares. Look, I think the jury is still out on mineral resources. What I can say with absolute confidence, though, apart from all the minus 1/3 in the system, if you haven't already, if it was to close beneath this level here, and I'll give you the exact number in a second, that low there, which is 75.81, then I would suggest that you continue to manage your exit on this one, not 1/63, but minus 1/3 on that one. and I'm trying to see if there's a reason to do any more any earlier. No, I don't see that. I think that's the key level there. So would I be adding risk to Mineral Resources? Absolutely not. Where could I add risk? We can see what I've drawn in. I'm a bit of a broken record, aren't I? You almost know what I'm going to say before I say it, but that's not a bad thing. That's a good thing. I need to see the price action turn back up. I need to see the right candles in the green zone. And really, we haven't seen it since last time, so we really need to shift all of these over, don't we? Because we are consistent in our approach. We need to see the signs that demand is coming back into the system, and we're not just yet. So in it there. Now, even then, would I get excited about it? I'm not so sure because of the influence really of this 1/3 up here. So let us keep moving. I'm going to do Liontown, which I think you can happily hold that. There's no reason to sell that. There's nothing in the candles to suggest to get out. So happy holder on that. Let's do LLM. I'm going to do a Leo, but I can never find it. Just the way this alphabetical thing works. LLLLLL. LLI. LLLLL. I'm going to drop Leo in a second to do this first. There we go. Actually, it looks half decent here. And the reason I say that is it hasn't given up its gains. It really has held on to most of those gains. So that's impressive. Would I buy it? No. No. It's pulling back now. We're seeing how it's responding to supply. That's not bad. But if it can do something like this with the right candles in the green zone, actually, it's starting to look half interesting. Maybe. I'm not going to draw the 1/3 on it yet. I think that's premature. But I do like the fact it's had a nice bounce and it's holding that bounce so far. But so far, it's just so far, right? We still need some more information. And literally, that last candle obviously still trading, and I've literally just clicked the update button on the side here. So we might even see that candle change as we get the latest hour update there, or it might not change. It doesn't look like it has. Right, half decent on that one. LRS was a request from Twitter. And this is as flat as it gets, which is wonderful because I don't need to spend any more time on this than to say, where's the desire? Where's the desire to be part of this Latin resources story? Where's supply saying, you know what? I'm not going to sell these until I get $1 for them. Supply seems quite fluid and flexible here and getting out at 12 cents. And demand doesn't seem to be anywhere inside, or certainly not excess demand. So let us keep moving on that one. We're going to go to LKE, which is just a disaster, really, isn't it? And really, the entire Liontown bounce, all that served to do is to get it back to what should be and what has been a very strong area of dynamic resistance. Let us keep moving then, because I think we're getting the picture here. Ioneer, ditto to Lake. There's nothing in there to suggest that the probability that we're going to see a rise in price is high. Okay, there's a low probability of a rise. Not to say it can't get taken over tomorrow. I can't see the future. All I can go in is what investors, people with cash and people with shares in Ioneer are saying right now. IGO, one of the majors, a pretty pathetic bounce, if you ask me. And really, unless it gets back above that orange zone, the long-term trend zone, it's in a bit of trouble. I won't draw the price action you need to see again. And we're going to go GLN, which was also a direct request coming through from Twitter. Very concerning, I think, today's candle. If it closes down there, then everything suggests we are continuing in this trend and back towards the lows there at 90. And I know people will say, hey, they're about to go into production. Lithium carbonate coming out of their ears. And I would say, well, the assumptions for Galan, right? The assumptions were built in for Galan with a lithium carbonate price around 600,000 yuan per tonne. And it's about 1/3 of that now. Okay, so if it was 220 was the expectation then, what's 1/3 of 220? Well, it's 70 cents. We're actually far, but there's still some more downside. So you've got to just get the difference between expectations and reality. This one is a little bit more in the Leo Lithium camp. I like the bounce. It's actually a really good bounce, but not enough for me to get excited, really. If anything, again, it's only back to the short-term downtrend zone, which is going to be pesky. And even then, if it gets through that, we've still got some issues at the long-term downtrend zone. Let's go to core, which I can do probably the quickest of the lot. It looks the worst, even perhaps of the lot. And look at this, the consistency. This is how you need to tune your eye in here, because this is what selling into a rally looks like, ladies and gentlemen. This is how you know there are investors just waiting for any sign of a bounce, any positivity, anything that will stimulate speculative money coming in, provide the liquidity just to get the hell out. Because they understand that this is not an opportunity to buy. This is nothing more than an opportunity to sell. And I'm sure you're going to tell me how good Core Lithium is, but it's not about what I think about it. So don't tell me. It's not about what you think about it. It's what the market, the people with big money think about it. Allkem, probably more in the Leo Lithium camp again, decent bounce, but it's losing the battle. And you can see what I've drawn here, what we needed to see. The demand side buddies in the green zones. Did we see? Actually, wasn't half bad here. Look, no. I mean, what do we get? We got supply buddies, didn't we? There's too many arrows on this chart. Let me get rid of some of those. What did we get? What did we get? That's supply buddy number 1. That's supply buddy number 2. We got the opposite. I was getting confused looking at this, but this is a wipeout. If this candle closes like this today, it has wiped out any fledgling demand that's coming in there, and we're probably going to go lower in line with what is happening here. So no redeeming features there. And the last one is Argosy, which actually looks quite terrible. Again, we can see what selling into the rally looks like through these last few candles. And if it breaks beneath here, if you're not already, or you haven't already worked on that, then that would be what my system would suggest. You need to do whatever you need to do. I think that's the most comprehensive lithium review, at least from a technical perspective, you're going to get, but I don't think we saw anything in there that deserved us going to the next stage of looking at those fundamental valuations. Let us go to Colin with NWH, NRW Holdings. And it looks like the lithium, like things make sense really when you think about it. Because if iron ore's in trouble, if lithium's in trouble, and these guys are in the business of servicing those miners, then we can see what's happened here, unfortunately. And who would have thought that that lithium carbonate chart and the NRW Holdings chart would look so identical, but they are. And therefore, I think you really need to be a little bit careful about what's happening here. And if anything, it's possible that this rally is giving you a chance to sell, because this old point of demand here, it was only a very temporary point of demand, wasn't it? Could well act as a point of supply into the future. The candles don't really suggest it at this stage. I mean, they're not terrible candles. We've still got white bodies. This upper shadow is a little bit concerning, so I'm talking about this candle here. But yeah, look, I can go hold if let's do buy, hold, and sell on this one. So a hold at this stage. If we see any more black candles, supply side candles, then we would be being very, very sensible, very cautious, and taking our medicine, I think, on this one, if you haven't already. And it does illustrate why we should never assume something's blue chip. We should never be lazy with our investments and say, it'll be right, I'll hang on, the market will go back up. It's just such faulty logic. Okay, so if we saw that candle or this candle here appearing in this zone, then we are going to go minus 1/3 as well. And then certainly minus 1/3 if we end up somewhere down here, or before if we get the price action we don't like to see. For now, I can go hold on the basis of the recent rally, and the candles aren't terrible, but only to look for a better exit. And if you're unsure of what you needed to do in the past, I know this is painful for some, but I think it's important that we learn over and over again, or that we're reminded by somebody who's not us of what we should have done. Okay, and I'll point out not just the fact that the model I show you every Tuesday suggests that this is minus 1/3 compulsory, but also that I teach you about Japanese candlesticks and looking at the severity of some of these. And here's another little thing when you think about it: break of a pod, right? This shadow here, even something like being even more conservative and saying up there is a good minus 1/3, there's a minus 1/3, and then beneath your last chance saloon is on the crack below that pod there, minus 1/3. And if you're following the model, there's really no reason at all for you to have still been in it after that point right there. Okay. I don't know if Colin's still got it, or Colin's saying he wants to, he's looking at it because he's interested in buying it soon. Okay, let's do rare earths, and very similar to the lithium story. I haven't seen what the neodymium, praseodymium prices have done. I suspect they're not booming. But let us say with only a dead cat bounce here. So a dead cat bounce is you drop something from a great height and it doesn't bounce very high, and that's what we've seen. I would suggest that we're in a bit of trouble here. Buy, hold, and sell on this one. Well, buy is 0% probability as far as I'm concerned. I'm not a buyer on this one. And I totally concede that tomorrow we may well see an almighty white candle, which looks like this, okay? Because Linus gets taken over tomorrow by somebody bigger. The bigger fish says, I'm going to have a bite of Linus because it's cheap. Could happen tomorrow, but it's possible. I don't think it's probable. I think the most probable outcome, unless I start to see the green, the white candles come in and the price actually head up, is that we break through here, and therefore you would be certainly managing your exit if you haven't already done it, and you've had plenty of reason to do it up to this point. So let us go here, and go to the next one. Carlo wants AR1, which actually looks pretty decent, isn't it? So the white candles change things. I mean, it was looking awful to there. So like many of these, then we get that rally. The candles I need to see. I need to see more. I'm not really going to get excited about this one until we hit there, probably pull back, and then we'll see where we go. And the reason why I've drawn it there is because I know that I'm going to draw this rectangle in next, and I'm going to tell you things like, well, I think this is going to be a big point of supply, and let us see how it responds. That supply, and then if we get the right candles in this area, we could consider buying it. Okay, a little bit of volume coming in, not a huge amount, but it doesn't look awful. Buy, hold, sell. I can hold that one. Would I buy it? No, I've told you what I need to see. Would I sell it? Let me see what candles come in around that point of supply. If I saw the wrong candles, those big supply candles, then I would consider exiting some of the position if I hadn't already. Okay, let's do some more of these here. We've got coming in with SRX, which actually looks half decent again. That's all the data we have. It's a new listing. It's been around since August last year, but I think it looks pretty good. Okay, I'm going to go as far as pretty good. I can't go fantastic because it's a very shallow. Yes, the price action is up, but it's very shallow, isn't it? I mean, we want to see, something that resembles. Not sure why they're not drawing. Try that again. We want to see something which resembles more. Now we're not drawing at all. There we go. Like that. Okay. I can go hold if you've got it. If you don't have it, there's not enough excitement in there, not enough interest from the volume to suggest that I need to buy it right now. Okay, but if you've got it, I can see a path certainly to holding it. Okay, let's. I'm trying to just look. I've got multiple places here to look at. WR1, another lithium company here. Winsome Resources. This is coming in from Adam. Adam, we've got some problems. Again, if we go back, and this is not to do the I told you so. If you tune in every week, I tell you so every week. Just trying to find that point through here. We actually went back into a little uptrend. That's fine. But it did give us a really clear-cut place at which to manage our exit. And we are here now. So we've got the price action. I'm going to keep drawing this, okay, because that's what I'll need to see. But when we do the analysis, we can see here some of the stuff we could have done. POS there, pod, this is okay, because you can see pods are rising, we're still okay here. Pods, there can't all be pods, that's a POS. And let me change that one. And the problem comes right here. So once we close beneath here, okay, you must manage your exit if you're using my system. If you're not using my system, you can do whatever you want. That's certainly a third there. And then you're probably another minus 1/3 here. And the most you would have had based upon the long-term trend only is a third, and you would be holding that third. But you would be exiting the third if it closed beneath this level. You wouldn't ask any questions. So minus 1/3 here. And to add risk, could I add risk? The question is, let's go question mark plus 1/3. Okay. And I would need to see the price action improve. So I need to see not falling pods and falling posses, but rising pods. So what's happening now? Okay, we can see the pods are starting to rise again. We can see the posses are starting to rise again. So this is all good. Okay, but I'm concerned about these candles. So if we look at candle, certainly we'll just go 1, 2, and 3. Okay, candle 1 is indecision. If I go back, and I can't really call them anything else now, but A, B, and C. So A, B, and C are very good. A, B, and C are fantastic, right? 1 says that we've got indecision as to what's happened previously, and that supply is starting to take control of the system. 2 says supply has control of the system. Okay, expect now we're in a short-term downtrend, and we're going to come back potentially to test those pods. And then 3 is saying, well, we're really in a continuation phase here. There's nothing really to suggest that the pod has come in yet. Okay, so let us just amend this to say that this is a question mark. We haven't seen it yet, and we would need to see it come in, and then preferably because of the strength, right? This is a let's call it technical term, a pretty serious POS up here. I would prefer to see how we deal with it first. That we get a little POS in here, a little test, the right candles in the green zone. I know I'm a broken record, but some demand buddies in here, and then I could consider going plus 1/3. Even then, it's hard. This is tricky. We're talking about, tricky stuff here because I'm trying, and again, I'm trying to give everybody value for their money in terms of give you the best analysis I can. But even if we got the right signal here, this area up here is going to be an almighty point of supply. Just imagine how many chat room hopefuls got in up here, right? Yep. And then cursed their luck for getting in at the top down here, right? What do they want to do? They want their money back. And the only way they can get their money back is if by some miracle the price gets back up to 240, where they are going to be sellers. Please God, if you just let Winsome Resources go back up to 240 where I got in, I got all excited. I read that message on chat room. I saw it on TikTok. It was all over Twitter, and I believed the hype. If you just let it get back to 240, I promise I'll get out and I'll never trade Winsome Resources again. So, we could draw the TA on it now, but even then, how exciting is it, really? Let us keep moving. I'm bloody awful today. I'm really nasty today. But finally, there's the segue into something I would actually buy. We talked about this a couple of weeks ago, and we said if we saw the right candles, look at this. If we saw the right candles in the green zone, I would buy. Did we see the right candles? I actually think we did. Look at this one here. That's a really nice candle. This is a good candle. This is a great candle. And then we saw reinforcement here. We saw the pods come in. We saw the right candles at the pods. Look, I don't know if you did. That's up to you. I probably would have or should have. I'm not sure why I didn't say, look, just be careful here. But hey, right now, today, we're through that. We're going to close above it, I think. Today's still a live candle. Looks great. I can't see any reason apart from the fact it's a bit of a ways away from my light green zone to go plus 1/3. But I'm going to put that on there anyway. I'm pretty happy with it. We're through the big POS here. That's all good news. Ideally, you are getting in a little bit closer to my light green zone, okay, ideally. But we can see how trends change, can't we? We can see what we need to do at the long-term trend zone. It needs to start to support price. So very happy with that one. Who gave me that one? Camille. Thank you, Camille. Finally, something to get excited about today. And let us now head over here because it's something I would actually consider buying. Let's have a look at WGX on the Thomson Reuters Refinitiv Icon spreadsheet. Only 2 brokers, so be careful. It's a very narrow look at the stock, isn't it? 175 high versus 150 low for a 162 average target, which allows 24.6% upside. So actually still pretty good, but don't forget that's from 130, whatever that might be. It's probably yesterday's closing price, because this doesn't tend to update till after the market closes for obvious reasons. Looking at the EPS line, it's a bit lumpy and a bit bumpy until we sort of get to 21, and then it gets better, and then it's not so good. It's a bit lumpy and bumpy. But looking forward, the two brokers, all two of them, are suggesting that there's going to be some amazing growth. So when I see a number that big, it tends to break my spreadsheet, because it's ridiculous, right? And it won't matter how much I account for that by making this high. It is not going to give me a good valuation, unfortunately, on this one. And the P of 8.4 is already very low, and certainly very low compared to the previous 5-year historical average, and quite sensible then, very low for 180%. So what I can say is this is either the cheapest stock in the history of the Australian Securities Exchange, or the spreadsheet isn't doing a fantastic job based upon the lack of data, unfortunately, that it's getting. I'll let you decide which one it is. Cheapest stock in the history of markets, not just the Aussie markets, it's all markets ever, or not enough data. We can tell ourselves whatever we want, can't we? I'm going to go to, this is, no word of a lie, this has actually happened. So I've got Camille asking for WGX, and then I'm going to go to Simeon, who's asking for WHC, which is that easy to find, next stock down. Last time we looked at this, I said something along the lines of, maybe you only had 1/3 left. I don't think that's the case anymore. And I would have said something like this: I can't see any reason to own Whitehaven Coal anymore. That's the last time we looked at this. Guess what I'm going to say today? Oh, I almost said it. Look, I still can't see any reason to own this one. It's getting better. I mean, look, this is a price action I drew at the time. So we looked at this maybe 3 weeks ago. It hasn't, well, it didn't do it at the time, but it might be doing it now. But it's very, it's a very small move, isn't it? And I don't think I can even draw. That's an outside candle. That's an inside. I can't even draw that. So really all we've got is that. We've just got one line up. So let us draw again what I need to see to have any chance of being interested in this one is something like that. Probably a little bit of mucking around even at that long-term trend zone, turning it from a point of supply here to a point of demand up here, okay, where it's coming back. Because you can imagine what these lines of the moving average, eventually they'll do something like that. So we're turning it into pod. Price action heading up, right candles, I might be interested in it then. And you might say, hey, Carl, if you wait till all that happens, you're going to have to pay $7.80 for it. I can buy it right now for only $7.30. That's way cheaper. And I'll say, well, you can do whatever you want. But if you're buying it now, you really have very little, a complete lack of clarity as to whether excess demand has established itself. You've got a few candles, but I'd rather wait until I can see the signs that demand is building, that supply is diminishing, and the fund managers are thinking differently about this one. So I can happily buy Whitehaven if it does some good stuff, but it's not doing enough of it just yet. Buy, hold, or sell. Buy's off the table. I don't think sell is necessarily on the table either, but it would be closer to a sell than a buy, simply due to the fact that you do have a bit of a POS through here. So there's a POS through here, which may well be impacting the current price. The current candle is not great, upper shadow, telling you that supply is manifesting itself in the market. And probably the more likely outcome to all of this is that it actually just does this, isn't it? I mean, that's probably the more likely outcome, and then finally breaks through there, in which case you would, if you haven't already, manage your exit. So let us say hold, and it's not a buy or a sell until we see some of those other things occur. Apologies if you've got it and you still think it's the best company in the world, because it's going to pay out its entire company value in the next 2 years as dividends. Okay, but if it halves in value, then maybe that's not as good. I don't know. Let us get to the next one. PEN from Gary. How are we going on time? Way behind time as usual. Peninsula Energy. I could go hold. Gary, I can do this very quickly. Hold. The candles aren't terrible. The price action has not yet established higher peaks and higher troughs. So let us see it do that before we would consider to buy it, because otherwise the trends I think are still scary enough for me to say just back away from a buy at this stage. But I can see a hold. I can certainly see a hold. There's plenty of white candles in there, and in fact volume is building. So it might be something I might have on a watch list that I might come back and look at in a week or two, but I don't believe it's a buy yet based upon my methodology. ATC, which is closer to a buy, but we need to see this. Well, I don't need to see it come back, but I need to see what it does here. And if it does pull back, I need to see some higher price action. And the reason why that might be a problem for you, Gary, is we will have some supply in and around this zone, no doubt, and then we'll have a bigger zone up here, which could well be an issue. So I can go hold on the basis the candles are still very strong up to this point, but I'll be watching very closely for any black candles or candles with upper shadows in and around that 11 to 11.5 zone for signs that I might need to lighten the load. But if we don't see them there, we could see them up here at 12.5 to 13. Okay, so happy holder in the meantime. Would I buy it? No, not enough in it to buy it on a risk-reward perspective because that supply zone's too close for my liking. Let's head to King, and Nick is reminding me that he has a webinar coming up, and he put all the webinars in there. So the link to the webinars, if you're not sure, is heading back here. So let me show you how to find it here, and live webinars. So market analysis, click up there, and then go to live webinars, and you can register for any of the ones that I run. So you can see ASX, Indices, Commodities, Forex, Crypto Edition, USA Edition, and then Khan and Nick will be running the introduction to Thick Trader Web. So how to use the platform, what's on the platform, and how to set up trading orders and things like that. And just click register on that one. So make sure you do that. Once we finish here, we can do it now if you like. Let's keep moving on these, because I want to finish all the lists before we finish today. So I've got to run through them very quickly from here. And Shireen has BOE. In fact, King is first there with Karoon. King, I could go a hold. I think we've talked about this one in the past, haven't we? We said that, if you like pain, if you're a sucker for punishment, you could pull out your nose hairs one by one, because I hate doing that. Or you could hold Karoon. And I'm not going to back away from that statement, even though it has gone up a little bit recently on the increase in the oil price. Look, I think you can hold it, all jokes aside, but it is going to have some issues around here. Okay, that's the supply zone, and let's see how we go. Black candles, upper shadows in here. Mate, I'm probably just going to do something better with my life in general, not just my money, but my whole life. Karoon Energy. Oh gosh, it's painful. And if we see the white candles persist in there, then continue to hold it. Would I buy it? Give me the right candles in there. Look, am I a sucker for punishment? Maybe. Let's see how it goes. Let's look at it. Ask me about that one in a week's time. Can it push through the POS at 240? I don't know, King. Maybe. BOE, Boss Energy, pulling itself off the canvas. It's funny, looking back at some of these scratchings I've had in the past, and we draw these POSs in. We've got new POSs on this one. I could hold it on the basis that this is a strong run. Today's candle is actually very impressive. I like today's candle, that little dip back and hold. This little dip back and hold of the long-term trend zone, right? Potentially now acting as a point of demand. So that's good. But can I make a trade work into here? Because this is going to be another almighty supply zone. And I'm not sure if I could be bothered. So if there's any comfort, if you're a Boss Energy shareholder, Carl's looking at the chart, you say, look, you can hold on to it for a bit. But if you're looking at this saying, oh, maybe I should buy this one today. No, Carl's not on that page. He's not a buyer of Boss Energy at all. Not yet. Let's BHP for Anonymous. Anonymous, next time put your name in. I think BHP's got some issues here. I think this trend is at risk of changing. I note the falling points of supply, but nothing more than I think than managing your exit. So I don't think you're holding a full position here, but I think you can keep some. So I think at most on BHP right now, the most you're holding is plus 1/3 of your original or intended position. And if it closed beneath this low here, then that's your final point where you would, beneath that for me, you would no longer be owning BHP shares, I think. I can go a hold. Okay, and another point, if you're a little bit more jittery, is maybe watch for that, how it goes through here. A close beneath that short-term trend zone is probably rolling back over again. But, look, it's not the worst one we've seen, is it? By any stretch of the imagination. A4N is one that keeps coming up on my scans. It looks amazing. I've actually been tweeting about that a little bit lately, and I think you can hold it. I know when people see something that's gone up a lot, they get a bit nervous. So if you are on it, I think you can hang on to it for now, but let's just be a little bit careful, because we saw a candle very similar to that, didn't we? End a trend on a chart not that long ago. It is indicating a little bit of indecision coming in. Today's candle's not ideal either. But let's peg a nice demand point. I mean, certainly through here, we can see we've got a nice little pos through here. In fact, that's an inside candle, okay? But it was, an intraday point of supply, and then we've got an intraday point of demand. And I think if it's starting to close beneath that level, and I'll give you the number there, that high is 79. And I think beneath there, you can take some profits off the table on this one, but probably at that stage only going minus 1/3. Now, if in the meantime we get something that maybe looks like this, okay, then you can start to be a bit more aggressive or get out a little earlier. So I'm just trying to give you a roadmap on how maybe to take some risk off the table if it goes wrong. Hey, it might go right. I'm a hold on this one at this stage. I'm not a buy for obvious reasons, because those two candles don't warrant me to buy, and it's a long way away from my light green zone. So I'm not a buy, but I can certainly see a path to holding, and I can't see a sell unless we see some of those things happen on screen. I've looked at Winsome for Adam, and in fact, I think Adam hit me up on the other side there, BML. Well, there you go. That's your miracle, isn't it? Your Boab Metals miracle, where something's happened in the market and it's popped up. If you've got it, I can see a path to holding it, although I'm not at a buy, I think, until we see something at least like this. But even then, it's going to have many problems to deal with through here. So it's not exciting me enough to call it a buy. But if you've got it, hold it, and just be attentive for those signs of those black candles to potentially manage your exit and finally rid yourself of the burden that Boab Metals clearly has been for such a long time. That's Hanelli. Hanelli, we got there. Did you, look, I'm not saying to do it, but that's good for you. I'm glad that we're up there. Last time we spoke, you were wondering about whether to take some profits. If this candle closes here, the answer is there's no need. So this candle here, if it closes, it's around what, 35, let's say 35.90 or better, even anything above that candle's high, 35.70 or better is probably fine. I'm a little bit concerned about this huge pile of supply up here, but there's no evidence really that supply is manifesting itself in the market. You've got to think these people have been waiting for a long time, Hanelli, to sell, and then, maybe they got it out of their system. Maybe they got it out of the system on this day here. Okay, so if we close at the high today, I think there's more in this. Where can it go? That's a tricky one, because we will have probably a few more supply points up here to deal with. But look, just a candle by candle basis, as long as the candles stay white and they stay with lower shadows, Hanelli, ride this one. See how much you can get out of it, and you know the drill. If they're black candles, upper shadows, and then the lower posses and breaking through a pod. I know, Hanelli, you are an expert, and I trust you to deal with it accordingly. Now, Wesfarmers was looking good. I thought yesterday, actually caught my attention yesterday with that big white candle there, and a little bit of a test of the POS. We just see how POSes work, can't we? I mean, what a great case study for how POSes work. And it comes back to that Sonic we're just looking at. POSes, they're frustrating. And we know how they manifest themselves in the markets with exactly that candle. But look at the size of the candle. It's relatively small compared to this big demand side candle here. So I don't think there's any reason to panic. I think it's okay. I think, this is all good. I'm happy with all of this. And I can't see any reason to doubt this new Wesfarmers trend. And the new trend is this and this. And the fact that we had, gone from dynamic supply into dynamic support, and it's all good. I like this chart. I do like it. And I think after it works through the little bit of funk that it is in now, and we might even see, an equal and opposite candle like that over the next couple of days. So it's sort of in the green zone. Keep an eye on it in here. And if you do see my demand side candles in here, then I would happily go plus 1/3 in there. And then on the next close back above that, the high, show it to you in a second. So that high there, today's high, 51.64. On the next close, back above 51.64, I could even then add some risk to it again and say go plus 1/3 up here. Okay, but I like Wesfarmers, 100% hold on that one. Okay, that's everybody done on the Zoom session. Let me head over to the streamers. I've been a bit negligent of you, haven't I? But let's do yours now. So we've got bullsheet with SRG. Very patient over there, bullsheet. I think it's okay. White candles, isn't it? As long as the candles keep printing white, I think you're okay. But, you know, we are in a bit of a supply zone here. White candles, happy days, happy holder. Black candles start to get a bit concerned. How do you know? Well, look what happened last time we got the black candles. They're not very nice, are they? And then you break beneath the point of demand, and then it gets even worse. So just watch and see on that one. I don't, based upon the last three candles, I think you're fine there. Okay, don't panic on that one. From Adonis, AIS, Eris Resources, I think it's okay, not wonderful. I'm concerned about the supply in this level. I'm concerned that even if we look at today's candle, it is manifesting some supply. I'm concerned that if we do make a major point of supply here, it will be confirmed by something that looks like this. So let's say today does turn into a pod, and this is all hypothetical, and then we get another confirming pod. Why am I writing pod? POS. And POS. Okay, if we see those, I'm getting concerned, and then I would start to manage my exit if I start to see that. Until then, I can go hold on the basis that this is strong, this is good, this is all good up to this point. And what we do want to see at some stage, and maybe we will see it, okay, is this price action. I just don't want to overlap it on that, but we need to hit the POS, and we need to deal with it well, okay? So if this POS, so I'm just transferring that POS. So it's going to be something like that. So imagine we're doing that at the POS, right? At the POS, and imagine then that this is occurring here, okay? And yeah, it's still got such a long way to go, really, for me to get excited about it. ALK is actually looking good. The last two candles, I did see it come up on my scans. Last two candles are really disappointing. Today in particular, because I know the rest of the gold sector is up, it is a gold stock if you're unaware, to the best of my ability. I know it's a leopard that has changed its spots many times, but last time I checked it was a gold stock. Correct me if I'm wrong. Look, it's okay. I could go a hold. It's not a buy. You know what it needs to do to be a buy. You know what it needs to do to be a sell. I can go hold. It's somewhere in between. I've done BHP for you, Adonis. A4N, Phil, I've done that one. Check the recording. LDR for Andrew. I like this one. What do we say? Look at these. We've done this one on the past. Maybe I said, I don't know, demand equals one. Not sure what I said. Let's delete them. Let's start afresh. I like this one, Andrew. I could add some risk. I could even probably add it a little bit today. It's very cheeky. I'd be more inclined to do so if there was a bit more interest down here in the volume, okay? But I do very much like this. You know, I like this as well. Yeah, look, it's such a cheeky one. And ideally, I need to see more interest before, because, you know, I don't mind throwing a little bit of risk around and seeing how stuff goes. Like my worst case scenario is I'll lose a third. I'll lose a bit on a third of my capital. Let's leave the 1/3 there. Look, it's a cheeky buy. It's a sneaky buy. I'd feel more confident if I had more volume, but otherwise, yeah, very interesting in terms of the price action and the candles and the short-term trend supporting and the long-term trend is up, all that other stuff as well. Andrew's saying, I put it on Twitter the other day. I probably put it on Twitter because of that white candle, Andrew. Yeah. Well, there you go. His next words are, curious as to what I see. I think I've explained what I see. Leonardo saying, with a PE of over 2,000 and possibly earning 79 cents per share in 2024, I would not be paying $90 a share for Xero. Fair enough too, Leonardo. LEL. It's Lithium Energy, another one of our lithium stocks for our big lithium sector review. Ditto on maybe the GLN one, I think it was. Was it GLN that had a bit of a rally? Leo Lithium had a bit of a rally. Look, it's not awful, but I wouldn't be buying this one. You have to look at many of these charts. Hopefully I've explained it clearly enough to say that you're just kind of just waiting to die on these. If you've given it all your hope and all your dreams and all your money and all your pain. Oh God, look at the black candles. Here's a tip for you, Davis. Davis, if you see black candle after black candle after black candle after black candle after black candle, 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 black 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 black. Davis, it's a pretty good indication that there is a massive seller just sitting there lying in wait. And it doesn't matter what the hell the good news is on the day, or if the ASX 200 is up 89,000 points, they're just selling. They don't care. They got in from such a low level. These guys are in at zero cents per share. Whether they got it in the float or they're, whoever. They floated it, who knows? But they're in from a price they don't care about, mate. And the only way you can get that black candle is if opens, boom, 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 sell, closes on the low. Even on a day where it might even go up, it still creates that close beneath the open. Mate, run a mile. If you see that consistency of black candles, run a mile. Are there enough white candles in the system to tell me that, hey, there's somebody in the system buying the hell out of this thing? Not yet. Not even close. Candlesticks will set you free, ladies and gentlemen. PAR. Oh, wow. I don't know what happened there. It could be anything. I'm going to go no comment on that one. Big black. Well, actually, no, I shouldn't say no comment. If it closes with that candle, no, I shouldn't say that. That's completely the wrong thing to say. If it closes with that black candle, this is a major POS. It is, I've called them in the past, a species ending event. I was about to not say anything about this one. I just saw the gap up. But if it closes that black candle, this is done and dusted, and it is run a mile. All right. Okay. Compulsory sell if you're following my methodology. That was for Hiping. From Tim, my main man Carl, ! Do you think it's worth adding more Liontown? If I didn't know there was a takeover, I would say yes. It looks a bit like NEU, which, there you go, look at today. So last time we looked at this, as much as it's gone up, right, I said plus 1/3, and I'm going to go, if it closes with that white candle today, plus 1/3 again, man. I'm just happy to keep adding risk. So there's no takeover on Euro. It's just funds accumulating. It's the opposite of LEL, where we just got black candles. It's just funds accumulating. Liontown looks like that, but I think it's more of an arbitrage play with the takeover bid. I'm happy to hold it. I'm not sure if I'm going to buy it just on the basis of that takeover. I don't know, it's a tricky one. Sorry if I don't have everybody's exact answer they're looking for every day. Right? From Adonis, normal candles versus Heiken Ashy candles, your view on trading. Let's do that in another session, because that's a whole session in itself. But maybe we can do a separate webinar, not like market analysis, where we discuss candlesticks in more detail, and maybe Heiken Ashy as well. NVX for Phil, and we're getting very close to the end here. In fact, we're way over. So I've got NVX, INR, REA, and then we're done. Don't put in any more. I can do this very quickly. You can see by my arrows that I've discussed the long-term trend in the past. You can see by these other arrows that I've told you that I would need to see something that resembles this before I even contemplated buying it, and that the short-term trends and long-term trends are so well enforced here that there's no reason to own it. And look at that. Lo and behold, down we come again. In fact, supply is manifesting itself one more time here at the short-term trend zone. And if anything, I can see it going further down. It's not time to buy it. I could be wrong. It could be the exact low. This might be the best time in the history of mankind to buy Novonix based upon if I could see in the future, but I can't. All I can go on is the strength of those trends, and that if it was any good, it wouldn't look that awful. INR, another one of those lithium companies, probably the worst of all of the lithium company charts that we've seen today, because there's no Liontown bounce. How much of a dud do you need to be to not even bounce on that Liontown announcement? And that frightens me, because when I talked about black candles, and we've got another example here, And fund managers, they don't have to be fund managers, they just be people who got it at 1 cent a share. Okay, and they've got zillions on them. And whether they sell at 60 or 30, they don't give a poop, right? The fact that Liontown announcement, all it meant to them was an ability to just supply into the craze. That is frightening stuff. And let me just make sure it was actually open. It hasn't been at a trading halt, but no, it's trading. That's amazing. There you go. We have a new winner for the worst lithium chart on the ASX, Ioneer. And I'm sorry, Rorty Dog, because probably not what you wanted to hear from me. And I'm not trying to be nasty to anybody. I'm just calling it as I see it. I like this one. I've said it to you in the past. I think I put it on Ausbiz a couple of weeks ago as my buy, favorite buy, plus 1/3. Happy to do it now. No reason not to. And if you've been following me, you should be adding, or should have been adding, risk to this. Of course, what you do is your own business. That's it. Let's call it time there, because I'm supposed to finish these at 1 hour, and I don't know if you've noticed what the time is, but it's getting a bit ridiculous. So let's say I'll be back on Thursday. Hey, this is the important bit. Don't run away, because I'm not here on Friday. None of us are here on Friday for obvious reasons. So I'm not going to bother cancelling the session. We're all grown-ups. I'm not going to be here on Friday. It's Good Friday, but I will be here on Thursday. Okay. There's the drill. If you're not already registered, to do so. If you're not a client of Think Markets, you should be. We've got everything you need to trade on your shares. You've got old-fashioned, boring old shares, $8 flat rate, Chess sponsored, Hin sponsored. But if you want to trade CFDs, you can do that with us as well. You've got your CFD account over here, you've got shares account over here, and you've got us looking after everything for you. And that allows you to trade your FX, your indices, your commodities, your futures. We didn't talk enough about gold today, but I think gold looks great. And a CFD long on gold, I think, is a pretty sensible trade. Market leading spreads, commissions free on shares. Award-winning broker, regulated all over the world. Easy to use multi-asset platform, a dedicated account manager. None of those automated AI chatbots. Okay, you can speak to a real person. If you're watching me on any of the streaming services, make sure you hit subscribe to stay notified of all of my future updates. Hit the like button to let me know you like what I'm doing, so I'll continue to do more of it. Apart from that, it's been a pleasure chatting with you today. Sorry for keeping you so long, but hopefully I made it worth your while. All the best if you're trading until we catch up again. Bye-bye for now. But before you run away, don't forget that everything we've talked about today is general in nature. I take no responsibility for anything I've said. If it goes up, hey, send me something nice, okay? If it goes down, I'm absolved of all guilt. That's what the disclaimer says. Before making an investing decision, make sure you check it against your financial situation, your particular needs, and important, you consult the help of a financial professional. The rest of the information in that disclaimer is important. Read it. If you've got any questions, give us a call, send us an email, or download our product disclosure statement, our PDS, from our website. Bye-bye.